That's the number one red flag I have. Because I don't care if you love your product. I care if your customer loves your product. What we've seen is actually since COVID, every region around the world in terms of startups has recovered except Southeast Asia. We're the one region on the planet that has not recovered, and we're actually back at 2016 investment levels. So we've actually gone back in time.
We actually called the investor up and say, hey, can we give you back the money? We have like 30% left.
We're trying to estimate, do I believe this business can get to $1 billion baht? Because if I get to $1 billion baht, I can list the business on the set and I can actually make money out of this or sell it.
First, I think we should set the stage that currently, if everyone in the tech space probably know that we are in a tech winter and deep winter, like the cold that we have outside, right? All the money is actually flowing back to US, India, China, and Southeast Asia is super cold right now, right? So the first question I think just want to understand from your point of view is, have things changed as an investor? No?
So for those of you who don't know, what we've seen is actually since COVID, every region around the world in terms of startups has recovered except Southeast Asia. We're the one region on the planet that has not recovered, and we're actually back at 2016 investment levels. So we've actually gone back in time. So every startup that goes, Tiwa, it's so hard to raise. I'm like, Thai, very hard to raise money, nah. Super hard. And so yeah, it's been really, really difficult for everyone. But from an investor point of view, it's actually a great time to invest because we're finally finding good deals. So by the way, it's favorable for investors. It's not favorable to the startups. How did we get here? So we got overheated in Indonesia. There's still a lot of skeletons sitting in Indonesia. So there's more stories that are going to come out of disasters coming out of Indonesia. It's coming. And I keep asking everyone in my crew, friends in the region, I'm like, okay, are we done yet? And they're like, no, we're not done yet. And that's what caused the problem, because we actually, as an ecosystem, we actually need Indo. Because that's the one that everybody got excited about. That's where the money was flowing. Right now, everybody is excited about Vietnam, much more than Thailand. But Vietnam's probably the hottest of the markets. There's some going into Philippines, but that's always structurally problematic. And Thailand is still this enigma that everybody goes, Thailand, what's going on? And they always ask me, and by the way, my partner in crime of where we invest is Boy, sitting in the back. So 80% of the time, if you see my name on a cap table, as an investor, you'll see his name on a cap table as well. So we're always together. So I actually said, why don't he should come on stage, not me. So it is tough from a founder point of view. From an investor point of view, good deals are coming up.
And has it changed how you invested since before COVID?
Well, yeah, no, I mean, I've slowed down my deployments because I would love to harvest some of my investments. By the way, guys, we had, how many die last year? Four startups I invested into died, gone. I've got 3 more zombies, right? Zombie,ยังอยู่ได้. They're like right here, but they're not growing. They're just zombies. Yeah, and then I've got my big great white hopes. I've got a couple of those. I'm like, okay, these are the ones I need to hit it. And hopefully they win and I can actually get some money back from those 2.
And that's from your point of view as an investor, right? From founders, how do you think they should think differently in terms of execution?
Okay, so you mean in execution or in pitching or in what?
Execution of actual business.
Yeah, so particularly in Southeast Asia, every investor is going to ask you about traction. And the investors, unfortunately, unless you're a super AI doing something that's absolutely amazing, they're going to ask you, okay, what's your revenue look like? And everybody wants to see the revenue. And you're going to struggle because right now, if you're an early stage and you're looking for, say, seed round funding, it's super hard to find. There's very little of it in the market. So you've got us angels, and even us as a group, we're less active than we were 2 years ago because we'd love to harvest some of our investments back. And then for the early stage VC rounds, VC funds, they're disappeared. So it is hard. Trust me, it is difficult for sure. And what happened was, so a lot of people will go, so what happened? Why? Because all these funds that used to be at seed rounds, they said, I spend all this money and time and effort looking at that small little company. I'd rather look at less deals and invest into Series A, where it's less risk. And so they've all moved into this Series A mode. And so it becomes really hard when we're a seed round financing kind of business. It is difficult And so I'm not going to hide anything there.
Right. So with that backdrop, would you think of instead of starting a company, join a company, or like as a founder? There are a lot of people who are aspiring entrepreneur in this room,
Yes.
right?
So, okay, I'm biased as a former founder myself. So I'm always like, go, we got to create new stuff. So I'm always encouraging people, take the risk, create your idea, and it's okay to fail. And the reason is because finding a job, you can find that. That's okay. But actually creating something, this is what we need more of in Thailand, is more ideas, more stuff, more people trying out their startups and trying to get their ideas and finding the solutions that work for the Thai market and maybe broader than that. Yeah.
Yeah. And I think one of the, like as a former founder myself, right? Like I always think about how can I get the revenue the fastest, right? I think that's the stage that we always think right now. For our companies, we don't raise until we actually have good metrics on like revenue and things like that. Bootstrapping is great, by the way. So in this environment, right? And I think just have to adapt, right? Can't really just say, hey, too hard to raise and then just give up, right?
And by the way, it is frustrating because you're like, okay, I've got my revenue this side, and then you go talk to an investor and they go, but your revenue is not big enough yet. And you're like, but that's what I need your money for.
Yeah.
Like, if I can get your money, then I can grow there. And they're like, no, I want to wait. And that's the nature of the current market. People are very shy. And it didn't help to have a really poor economy in Thailand, right? That didn't help anything. So we've been in this kind of circle and cycle that's been really rough, particularly for our ecosystem.
But that's always the case for fundraising, right? You're too early. Can you expedite that with 5 different conversations and then you have one term sheet on the table?
Maybe give a VC perspective of things. So you have to remember when you guys approach a proper institutional, like a VC venture firm, you got to think like they do. And this is where most founders mess up. They don't understand the life cycle of the fund that they're in. So, for example, actually Boy and I are invested into a deep tech fund together. It works on a 10-year timeline. The first 4 years is deployment. They will deploy money in the first 3 to 4 years, and they usually allocate 60 or 70% of that fund. So let's say it's a billion baht fund, right? 30 million bucks. And we've got a billion baht. They'll deploy 600 million. What's with the last 40%? They wait for follow on. And a lot of you guys will approach a fund, you're thinking, hey, I'll go pitch them, but actually they're not in a deployment mode. They don't have the funds to deploy. And then the startups get pissed off. In Thailand, we've got the CVC. Those are what we call evergreen funds usually. They always have money. They're happy to deploy, they don't work on these cycles. But for proper VC, they have to work on this cycle because after 10 years, they need to return my money with profit, right? And we don't deploy into this stuff because it's for fun. But we're looking for 20 to 25% returns, IRR, on our capital. So you've got to understand where they're at in their timeline for the VC you're talking to. Also understand their themes. For example, since this is a health tech, med tech meetup, are they interested in doing health tech type of stuff? So for example, like a very good friend of mine, they run Cento. Cento does Series A and above, and they're not interested in health tech. They're interested in embedded finance. So even though they'll meet with you, they're actually not a good target for us to learn to actually pitch to. You really need to understand and do your homework on who you're going to pitch.
Yep. And angels? How do angels think?
Angels, I think Boy and I would say we're stupid money. So and what we look for is, first thing is people. What we're mainly looking at is who's the founders. Do we believe that this founder is resilient enough? And by the way, we've gotten it wrong, and we can have that conversation off stage of where we've gotten it wrong and where we misread and misjudged the founder. But we're looking for that founder that we know they're willing to go the whole distance, the whole 9 yards, and actually willing to pivot as well. And they know that, hey, I'm in it to win it, and I'm willing to just work to make sure this business is successful. So it's mainly about people is number one. Ideas is second, is do we believe in it? But first, it's about the people. Yeah.
What are the signals that you look for to come to that belief, though?
We're looking at how you're looking at the passion of the founder. What's their willingness to really change? We're trying to judge, and like I said, we've gotten it wrong, where we're trying to understand their resiliency of their willingness to really push the edges and pivot as well. Yeah.
Could you share your learnings? What have you gotten right and what have you gotten wrong?
I think like the ones that come to mind very clearly is one, we misread the market. We thought it was just a mistimed market. One that we believed in and we believed the founder and we're like, okay. And even though she pivoted, it still was mistiming on the market part. Another one was we misjudged the founder thinking that, okay, he would be willing and resilient enough to continue to change. But the truth was he's so wealthy himself. He was like, I don't want to do this anymore. Right? And that's another example of one. Are they really hungry? And that's what I think we really want to know. And I don't think I definitely have a failed track record behind it. Out of 14 investments, I've had 4 fail already. That's okay, because what I'm looking for is the 1 or 2 that actually knock it out of the park. One of my favorites is a deep tech juice company. So they do low sugar juice, incredible juice. Love that company. And so that one's really exciting. There's another one, which is Block Arrow, which is a blockchain company. They do monitoring parts, engine parts, from cradle to grave for big engines. And they just signed a deal where they're the exclusive blockchain provider for all secondhand parts going into China. I've just joined the board of MUI Robotics. That's another exciting one. And actually, they are health tech because they've just signed an MOU with Jula to actually use their odor detection technology to actually do liver cancer detection. I don't know if you guys know this, but you can use a dog to go smell and they can figure out, does this person have cancer or not? We want to use IoT to do that. So that one's really exciting.
What are the red flags that you see this founder?
First red flag, if the founder's in love with their product. That's the number 1 red flag I have. Because I don't care if you love your product. I care if your customer loves your product. Because so many founders, and they're so confident of themselves. They're like, oh, I know exactly what I gotta do. I go, I don't know. Show me data. Data only comes from one place, your customer. I don't really care what you think. And so many founders fall in love with their product, and that's a first red flag for both of us, I'd say. Second one that's a red flag is your messy cap table. So when you find that Kun Lung is on the cap table and he owns like 30% or 40% because he gave you 100,000 baht, that's a massive one that we're like, cannot. You cannot, I can't deal with that. And that means we've got big problems going forward in investment for your company. And so many people say, okay, I'm going to use it my family money. But then the family says, but hey, we're going to put in 2 ล้าน, but we need to own 50% of the company. Oh, no, that's not okay. Because I can't invest into that company any longer. And their cap table is a pain.
Have you seen companies successfully clear their cap table?
Well, I've done it.
You've done it?
I had to clear my company.
Sorry.
I had big shareholders, all publicly listed companies. 2017, and they couldn't get along. JVs never work out. So they asked me, and so I ended up MBOing. So I bought back my company with VC money from these big investors. The investors were who? Telenor, DTAC, the owner of DTAC, Singapore Press Holdings, Naspers, and Shipstead. So I cleared them all off my cap table. So it can be done. It's not easy. Of course,
It must be expensive, right?
It is expensive, but more expensive for them than it was for me. I mean, I got a good deal on my business, right? But you can clear your cap table and you need to work that out. But remember, looking for the right angels is super important and being founder-friendly angels. So a lot of people are like, we do tours of talking about angel investment and there'll be a room full of this. Like, I'm like, how many of you want to be angel investment? Everybody puts up their hands. I go, how many of you are here because you want to make money like you invested in Zuckerberg? Everybody puts up their hands. I go, put your hand down. If you're in this to make money, there are so many better and safer ways to make money than doing angel investment. But why do we do it? Because we believe in the founders. We want to see Thailand's ecosystem grow. We want to help the founders. And so when you want to look for founder-friendly angels, because we're the ones that are really easy. We also look out when you get a term sheet, we're the ones that look at it and go, no, we aren't accepting that. Not because we're selfish, but we're looking out for you. And those are really good angels. So when you work with either like somebody like myself, Boy, Pam, Pawut, you want these guys who are founder friendly. And otherwise, everybody's looking out for just their own pocketbook. And what happens is people get greedy. They get very greedy. And then they want their money back, and then they take you to court. And the worst thing you could ever do is actually go to court because nobody wins. It's a fight. Just like in your relationships with your significant other, your fan, right? When you fight, do you ever walk away going, everybody gets hurt? So this is what you're trying to avoid. You don't want to have fights. Another red flag for us, สามีภรรยาทำงานด้วยกัน So that means couple. When they're the husband, wife, or girlfriend, boyfriend. Why is that danger for me? Because at some point, they're working and they're going to break up. And when they break up, that's going to be a massive founder problem. Well, you're not my boyfriend yet. And it's like, friends is good because then we form a team rather than you have a key partnership that goes beyond the business. So that's another red flag for me at least. I think, I don't know, boy, would you agree with that? We always, when we see them as cool, we're like, no. Let us know if one of you is going to exit and only one of you work. It's like for a long time, I asked my wife to come help me with Kaidi, right? She was number 3 employee and so go. And my wife, she goes, no way. I go, why? And she goes, Tiwa, I'm the boss at home. There is no way you will ever be my boss. Right? And CEO, she been chairwoman.
That's great. It's the same for me. My chairwoman is behind.
Chairwoman in the back.
Yes. So now we have talked about what to look out for and things like that. How to get your attention though? Like as a founder, walking up to you that a lot of founders that probably do. What's the first 30 seconds that will keep your attention?
So if you send me like blind LinkedIn messages, chances of me responding to you are slim to none. I get too many of them. I ignore them. Actually, in my case particularly, if you really want my attention, you gotta get boys' attention. If you get boy or aim Amarit's attention, they will get my attention. But that's just me. But in particular, like you've got to get their attention of, you need to paint this big picture of what your vision is. And we need to understand that. And where most founders, and actually this is what I was working on yesterday at the board meeting for MUI, I go, we need to paint the picture correctly. Because they've been struggling to raise. They've actually have traction. Over $1.5 million. They're doing 50, 60 million baht this year. And it's like, but they're still struggling to raise. And it's like, that's because they're not telling their story correctly. And you've got to paint this picture that sends the vision of what you dream about and why this is an amazing opportunity for that investor and what you believe that this is the opportunity. A lot of times we paint it from what we're doing as opposed to, but this is where I'm headed. And remember, most of us investors, we're idiots. We don't know. I don't understand your business. How much do I know about health tech? Nothing. I'm not a doc. I'm not a programmer. I don't know anything about health tech, right? In fact, if I was looking at a health tech company, I'd probably call Ma Tam and say, Ma Tam, what do you think? Right? That's going to be my response because I know him. I know he understands this world. That's why I'd ask him. So remember, we don't know. So you've got to paint the picture for us. And you've got to tell us why it's this amazing opportunity. There's just standard pitch deck, which you should have it down and really good. But always start out with, who's my customer? And this is where most of you guys will come in and tell me what you're doing. I was like, no, I don't need to know what you're doing. I want to know who's your customer. And good angels, this is what we're going to look for. I want to know who's your customer first. What's their problem? And then how do you solve for it? Yeah.
And traction comes after. As an angel, do you look for traction?
Yes, some level of traction. It also depends upon the stage of investment. I would say we are usually later stage angels. So once they've got some traction, but there are those of us who just believe in the vision and they're like, okay, let's put in some cash and see where it goes, right? So those are opportunities as well.
So there are also early stage and late stage angels.
Yes. Those of us who have been around a while, we're like, I want to see your traction first. I want to see you proving yourself before I'll put in capital. Usually. Trying to think, did we ever do one that was just idea stage? Boy, have we ever done an idea stage one? Yeah, that's true. In fact, Fraction was the one that we did, which was the RWA, so it's real world asset fractionalization of the assets. And so they hadn't launched yet. But we believed in what they were doing. Yeah.
What are the general ballpark check size valuation in terms that you have invested in?
So, check size for me is typically anywhere from 5,000. The biggest check size I've ever deployed, I've deployed 2 or 3 of them, is $100,000. So up to 3 million, those are my biggest. So that's me. My average check size has probably been around $1 million baht, so $30,000. That's my average. In terms of valuation, if you're early stage, we shouldn't be talking about that. You should be signing safe notes. And the reason is if somebody comes to you and says, I want a valuation in your company, you're like, what do I value it on? I have 50 customers and they're not paying me yet, right? There is no way. But so you want investors who are smart enough to go, okay, we're going to do a safe note. What is a safe note? It's a simple agreement for equity.
Equity.
Yeah. So simple agreement for future equity. It was created by Y Combinator. And the problem was because you've got early stage, I can't value the business. So instead, we've put a mark in it, and with the terms, you say, some point in the future, you're going to have what we call a priced round. That means somebody's going to come in at a seed or a Series A, and they're actually going to put a valuation against your business. But between now and then, I don't know. So usually it lands somewhere like $1 million. We just land kind of simply there. And we go, $1 million, I'll give you $100,000. That means I get 10% of the business when we convert, and I get a discount on it. So because my capital was at risk first, that means I get an advantage over when they actually do a price round. So if you've got angels that aren't willing to do safe notes with you, you're probably talking to the wrong angel now.
How do you use safe notes in Thailand?
So technically, safe notes are not allowed in Thailand. And so a lot of investors, they'll go like, hey, I can't do a safe note, so you have to structure in Singapore. However, I always do. I'll do all my investments are safe notes in Thailand. If we ever go to court, this business is so gone that it doesn't matter. Once we start to get into institutional investors, they're going to fix all this stuff, and I'll have converted to equity anyhow. So this is my attitude towards it. A lot of investors like, Tiwa, you're so risky. I was like, yeah, I'm okay to take risk, because I also know that even though it's not legally recognized here, it's a contract, but I'm so early into your business. If we have to go court over this, we're done already. It doesn't matter, and there's probably no money on the table to take. So what are we going to argue about? You know who's going to get rich? The lawyer's going to get rich, not me. Not you. It's going to be just the lawyer.
Have you seen angels in Thailand that goes a little bit earlier?
Probably the most prolific angel in all of Thailand is Pampawut. He's got like 40-something investments, and he does very early stuff.
You guys have any questions?
Any questions I can help you guys with?
Yeah.
I had a question because I think you mentioned how Southeast Asia is a bit dead right now. Is that regarding Southeast Asian VCs investing into Southeast Asian businesses? The follow-up question is then, how does it look like for Southeast Asian startups trying to raise from like where the money is, like the US, China, India, and industry-wise, so like if tech is going down, what is going on?
So Southeast Asia is, like I said, it's a desert at the moment. It has been for years. Hopefully, we're going to see a pickup of investments because there's so many good deals on the table for VCs. There was a period when everything was overheated and it was overpriced. And founders were looking for too much money, and everybody's like, your business isn't worth that. Sorry. We're in this stage where I think we're going to see more activity in 2026, which is good for us. Not great from your valuation point of view, but good for the startup community that people are willing to deploy again. And then your second question was, what about raising from outside of Southeast Asia? Really difficult to do if you're only a Southeast Asian business. So if you want to properly do this, you have to have a global viewpoint. You need a global business. My advice is just fly straight to Silicon Valley, park yourself there for three months, and go talk to people, and then figure out you probably need to move there. That's the truth. Because they don't understand what's going on here. So that's why it's really very regionalized for us, where you got to talk to Singapore for that money. There is some money out of Dubai now. Be careful. There is a lot of crypto bro money over there and a lot of filthy money, because people are getting out of other jurisdictions which are problematic. So you need to do your due diligence on who is that guy, where'd the money come from, because you don't want like drug money coming into your bank account, right?
The other question was industry-wise, like if it's going down, are there anything?
Yeah, I mean, industry is AI, so everything's on AI. Health tech is also really hot because AI's changed the game. And remember, there's like kind of the big four, there's basically 4 areas that have never been disrupted, right? That's education, healthcare, government, and material science. These are the big 4 that have never been disrupted, and they're now being disrupted finally because of AI. So that's why so much money is headed there, and we're going to see lots more investment. And as I just found out today, I didn't know this because I hadn't read the news, was that ChatGPT just came out with their health. So that's exciting. And so you're seeing a lot of movement in these areas. But can I add to this? Me as an investor, like I speak on AI, I teach on AI, and people ask me, is like, what about your investment? I go, I don't know what to invest into now. I have no idea. And it's really hard for me to see the crystal ball and see what really is out there. However, like I said, MUI Robotics, I'm very excited about that one, and I understand where they're headed. So it's hard for me to really understand. If you're just a wrapper on GPT and Claude or any other model, that one's really hard for me because I don't know how you're going to get disrupted.
I think on AI quickly on healthcare, right? I think people are more excited about the workflow automation part than the actual clinical AI, because clinical AI, you can get a lot wrong. You have to go to the level of open evidence.
You guys familiar with open evidence? So this is the AI tool that the docs is the breakout hit. It's a unicorn now out of the US. The docs use that as their reference tool to help them in their day-to-day understanding of clinical outcomes, what they have to looking at. 30 years ago, I started my first career in a startup in electronic medical records. Very first version I deployed to a 260 person, 17 specialty, 60 doc clinic was a DOS-based EMR. And then we transitioned them. So I left that world 25 years ago. In 2000, I finished. These types of automations that we can do for healthcare is a big, big advancement. And actually I have an expert sitting over here because this is what he practices on a daily basis.
So open evidence, actually they don't do generative AI. If you actually listen to their talk, is they do index-based. So they go through the actual literature, find the actual word, and reference that part out. So they don't do generative AI because it hallucinates and they don't use it. So open evidence, Doximity, those are the two companies that I know.
So my question is not about the health, but I want about the entrepreneurial journey, because both of you are founders and already exit. I said just one about the exit journey. So when I ask you how did they come, is you looking for that or is coming? It's funny, and when you're looking back for your exit, is your regret, are you grateful or any learning from that? I think that's very hard to find, and I cannot read any article about that. So if you can share it just.
So actually I didn't want to sell my company. I was forced into it. So what happened was I was trying to write a Series A, and I got an unsolicited offer for less than I had bought the company for. And the shareholder said, I want this deal. And I was like, excuse me? Why? Because they were my biggest shareholder, and guess what? The buying company, they were their biggest shareholder. Oh, crap. So then I had to go to fight. Okay, I'm getting forced to do this, so now I have to go find a competing offer. No lie, I got that unsolicited offer on the table, and I go, we're going to take the first offer? I didn't know we were selling. No, we want this deal. Fine. I go, wait a second, we don't have any competing. They go, I'll give you 15 days. 15 days to find a competing. And I was like, no. This is the period. You can ask anybody who knew me. I got all the gray that you see now is from that period. And so I was like, shit. And I started hunting for a deal. I actually got interest, but I had to draw out. They gave me 15 days. I kept drawing it out to 45 days until finally my board threatened me. They said, if you don't sign this term sheet, we're firing you as CEO. So I told my other shareholder, I go, Dimitri, you do not sign this. I'm working on this deal. Go close it for me. And I got to sign this and go into exclusivity. So I go into 45-day exclusivity. But during that time, Dimitri's working on the deal for me. And I get the deal, it's 2.5x, 2.5x their existing offer. I went, bam, how about them apples, bitches? And my board, I go, bam. And that was the day that exclusivity expired. My board was trying to get me to sign an extension. I was like, oh, I don't want to do that. So I was like, delay. I would not sign the extension on exclusivity. So the day it expired, bam, I went, how about them apples, assholes? They were like, what the? And they're like, I go, now what are you going to do? And they couldn't do anything because if they don't take this offer, 2.5x, I will take you to court because now you're not doing your job. So they had to sign it. So now we go into the next 45 days of exclusivity. I'm doing the deal. That company that gave me the unsolicited offer, 5 days before exclusivity is up, he calls me, the CEO calls me. He goes, hey, Tiwa, do you think I still have a shot at your business? No, that. My board member breached contract. 5 days later, I got another term sheet from them, 20% up on this offer. And the problem was, I was like, "Nui." And the problem was 20% up is material enough. This is not worth it. But it was 20%. So I had to call this guy who'd given me the deal. And I told him, I said, look, I just got an offer 20% up. I can't say no to this. And he called me back and he said, look, Tiwa, we're not going to compete. So either you want to go with us or you can take this one. I had to take this one. So we closed it, and then they always say, CEOs, you make your own luck. No. I'm lucky. Why? My deal closed. I negotiated 100% sell, 50% upfront, 50% 12 months later. I negotiated. They want to keep me in for 36 months. I go, you can have my business. I've already been through this with you guys. You tried to cheat me the first time. You can have my company. So I go, no, 12 months, 50% upfront, 50% 12 months later. The first 50%, when did I get the money? January 21st, 2020. If my deal had slipped by 3 weeks, we would have gone to COVID. Everything would have changed. I would not be sitting here talking to you as an angel investor. My life would have changed. But I got super lucky. They knew I was going to be a problem because they wanted to do things different. So they fired me 2 months in. So the day they fired me, I was like, so I called up Shannon, Kalyanamit. I go, Shannon, where are you? She goes, I'm at home. I go, dude. And she goes, what happened? I go, I got fired. And she goes, congratulations. I went, huh? I went and saw one of my best friends, Paul Suarkun. We're sitting at the house and we're drinking on a Saturday and we're like, dude, I got fired. He goes, congratulations, dude. I was like, what? And he goes, how did you negotiate that? And he goes, I want to get fired. It took me, no lie, 6 weeks before I started to internalize that, oh my God, this is a good thing. Because I'm now finally free of this business. Like, it's grown up, the baby's grown, and it's somebody else's now. That's fine. And I did my job to this level, and I was like, oh. And then we went into COVID lockdown. So my boss, he was stuck in Sydney, couldn't come back. That was March 2nd. This is how important these dates were for me. I can tell you when I got every step of this thing. I can tell you so many dates. But it's March 2nd, I got fired. I said, effective when? They said, end of March. And then we went to COVID lockdown in Thailand on March 15th. He was stuck in Sydney. I called him up. I go, you want me to get out of here by March 30th? And he's like, yeah, maybe that's not such a good idea. So I stayed around till the end of June. By the way, because I got fired, I got 8 months severance too. Yay! Wow. So exit story. It was very stressful, but it worked out okay. By the way, it's always like this. You really have to fight for it. And it's never easy.
It's actually the same day, January 2000. I was going to quit. Half of my team resigned. I started the company out of school, right? So I didn't really know how to manage the company. So half of the team quit. We're like, oh fuck, COVID is happening. Wanted to return the money. We actually called the investor up and say, hey, can we give you back the money? We have like 30% left. And say, no, don't give us back. Why you want to give us back? You just keep it. If you run out of it, just use it. We're like, okay, fine. Let's just our last shot, right? Like whatever we got, just try, continue to do it. And because half of the team left, the burn rate lowered significantly, right? So we're like, oh, our run rate is a bit longer. On February 21st, 2020, COVID was picking up, right? And we decided to deploy COVID insurance. We put on the system COVID insurance on the same day when we were selling 400 policies a month. On that single day, we sold 4,000 policies. Woohoo! 300x on a single day. And we got so much cash in, right? Our problem at that time, we couldn't sleep because we couldn't reconcile the cash, right? The same amount of cash was coming in at the same time. After that, we were back on the map. All the investors were like, hey, we saw your hockey sticks. Can we invest? So we closed a few term sheets. And then in April, I got accepted to MIT Sloan. I told my founders, probably MBA, and most of our business is in Thailand. My co-founders were Indian and Singaporean. So they start looking around, but we couldn't tell to our investors at that time. This was one of the most prestigious Singapore VC. We were at their due diligence. So we found a buyer, Indonesian-based startup, and say, hey, things like that. And we were actually in the last week of due diligence with that for Series A, and we told the Indonesian startup Kuala, you wire us 100K this week or go with it, go ahead deal. So on Friday they wire us 100K and the deal was done.
And you sold 100%?
They let us sell 20%. I actually made more money after the exit because they went on to raise Series C and D.
Did they clear you out in Series C or D?
No, I
still shares. Oh, okay. So you got a bit of money out, but you still have investment. You still have shares over there.
Yeah, majority of mine is there.
Okay, so we're just for them to IPO or do a trade sale.
Hopefully.
All right.
If our investor taking our money back, I would sitting here. I didn't have COVID on the opposite side, right? We wouldn't have that hockey stick that we raise and sell. Any last questions?
So the question was our investments versus the mundane versus the big. And actually, I think our investment philosophy has also changed a bit where we look for some balance, at least us as a group, we look for some balance. So for example, Boy and I have invested into a villa in Phuket. Best investment we ever made, fastest cash. So we do have some mundane stuff that we invest into, but we're looking for a business that has very clear ROI. So let me try again. One more time, restart. What's the difference between an SME and a startup? Okay, SME, 80% of them fail, and usually it's because of cash flow. They don't manage their cash well enough. And SME means known product or service, known customer base, known source of revenue, known margins, and a known or estimated period to return on my investment. That's an SME. So you want to start up a coffee business, I'm going to see very clearly, like you want to open a coffee shop, this is what I'm going to look for. So then what the hell is a startup? In my opinion, this is just my definition now. A startup is identified problem or opportunity. I think I have a solution to it. I hope I'll have a customer. Maybe I'm going to have some revenue, and hopefully it'll make profit someday. Failure rate of startups, 96%. So your average class out of Silicon Valley is about 10,000 startups to 15,000 startups. So any given class, let's call it 10,000. That means 400 actually make it. Out of the 400 that make it, usually in every given class, meaning each year, you usually have one company that clears 90% of all value off the table. All value creation comes from one company. The next 9 take the remaining 10% of value. The other 390 startups still left on the table are dealing with scraps now. I'm not necessarily looking for the number 1, but I'm looking for the other 9. I'd love to have the number 1, but it's never going to happen. So when we look at our investment, we're looking for, okay, do we believe thing can get to, in a startup investment, there's basically one heuristic that you use. And this is what all VCs kind of use. If you're a local Thai business and we're just looking at Thailand as your market, we are estimating, do I believe this company can reach 1 billion baht in revenue? Do I believe that? That's what we're looking for. And we're trying to figure out, okay, market size, opportunity, how are you going to make revenue? We're trying to estimate, do I believe this business can get to 1 billion baht? Because if I get to 1 billion baht, I can list the business on the set and I can actually make money out of this or sell it. If we go outside the borders of Thailand, now we're looking for $100 million in revenue, 3 billion baht in revenue. That's what I want to know. I want to see, do I believe that this company can get to 3 billion baht in revenue? That's kind of the heuristic that everybody uses. It's an easy way for us to go, yeah, is this good or bad? From a SME, like I said, I'm just going to look at the numbers, understand your forecast, your projections. Do I believe them? I want to know when I can get my money back from that investment, right? And what does that look like over time? Yeah. So.
Very clear answer.
Cool.
Yeah, I actually like mundane stuff. Personally, it's very clear metric. But I think when we look at like nursing home stage of development of the industry, a clear way that you can win, right? Like we identified, we came the new model of becoming a nursing home developers and not operator. So we provide this space, but specifically for nursing homes. So stand the nursing home space. We are the earliest to do this business model. We know all the operators know want to expand, they come to us. If they want permanent home that they don't have to lease for 9 years and cannot invest and compete good real estate, they come to us. So those are the
and that real estate business.
It is.
And it's what your family has been in, right? So you guys understand real estate as a family. It's what we've been doing for 40, 50 years, Chama?
Yes.
As a family.
For 30 years. Yeah.
30 years,
So we've been selling land 30 years. So that's why we started that. The HR for nursing talked to all the nursing homes and realized everyone was using pen and paper. We're like, how you guys operate, man? Like, and then we started a business. That was a startup, but I wanted to bootstrap it. So we didn't raise. We know the market is good. So we could get cash flow pretty soon. So that's, I think, when underwrite our bottom line is, can you get to cash flow positivity? At the worst case, we get dividend, right? So that's just our philosophy. And if you go out, and that's great for us. Otherwise, then
when I do start, I'm not interested in dividends. I want exits. So exit me. And by the way, if Series A, Series B, they want to clear me off the cap table, I'm happy to go. No problem. Why? Because I want my money back. We're always happy if they want to clear us out. We've been through this where they're like, okay, we want to clear some of it, but we don't want to clear PTY and P-Boy. We're like, come on. And they're like, no, P-Boy and PTY, they still help the startup. And we're like, no, take the money. I'm going to keep helping them, but take us out.
I asked them when Koala raised, like, can they more of my money? It's like, no, that's all we can take.
Yeah. Awesome.
But yeah, like different ways of approaching, different way of underwriting their own risk, right? So I think have to understand to them, talk to their understand their previous investments, right? How do they talk about like what are their previous investment, what companies in the portfolio? How do you think about that investment, and why do you invest?
Yeah.
That is the best way to.
For example, like everybody always asks me, what do you invest into? It's easier for me to tell you what I don't invest into. I don't invest in gaming because I don't understand it. I'm not a gamer. I don't get it. I don't stand it, so I just don't touch it. Another area that's really hard for me to invest into is e-commerce, marketplaces. And they go, why? Because I ran that business. And I know how much money you need to make it work. And so it's really hard. It's not an absolute no for marketplaces, but it's going to be a really hard discussion with me, right? Or if you're in like food delivery or things like that, because we invested in Skuta, was his angel investor when for Skuta, and that's another one that's probably difficult for us. Mobility and these things are probably difficult, but not an absolute no, just difficult. Yeah.